The data says the economy is still growing.
And very strong.
Yeah, it's very strong. And if we get a deal with China, it looks like the Fed is now dovish. They're not going to do anything stupid, hopefully, and then we'll be okay. What we see for 2019, we think earnings will be in, 6-7% earnings growth. Sales are going to be up maybe 5%. I mean, there's no reason. I mean, this is where people panicked, got out in December, said, and they missed an opportunity. And again, I call it an opportunity because, again, I think 2019 can be pretty strong.
My name is Ashley Micciche. I'm the CEO of True North Retirement Advisors, and I'm here with our founder and president, who also happens to be my dad, David Wilson. So this month, it's January. This video goes alongside of our newsletter that we put out every month, where we kind of talk about where the market's at, what's happening in the economy, if the market's up or down, what's driving that, and our outlook and our crystal ball predictions from where we go from here.
We are, June will be in the longest economic expansion ever. There is no time frame and we talked about this in the last video, there's no reason it can't go on for a few more years. Nothing says it can't. We're still growing. This next year, we think we're going to grow at 2.5%.
The economy, GDP.
The economy, GDP. We had 312,000 new jobs in December. We had, for the fourth straight year, we had very strong automobile sales. So, the economy's growing fine.
Plus, inflation is low.
Inflation's low. Everybody was worried that, the world's coming to an end in the last quarter of last year, that we're going into recession. And now the economic data that comes out said, hey, it's not so bad. So the Fed came out just about a week ago, and they basically said, well, we're gonna look at the data before we raise rates. Okay, that was huge. I mean, people don't realize how important that is. A lot of people thought they were gonna raise 2 or 3 times this year. The market was telling them stop. There was, and even with the balance sheet, they were letting 50 billion roll off every month. Well, there's tremendous demand from overseas for our dollars, so you have that combination. So again, basically, Fed Chairman Powell came out and he basically said we're going to look at the data, so that calmed the markets.
If the Fed doesn't raise rates enough, and we do go into a recession, then they don't really have a lot of leverage to pull anymore. So I think,
do you want them to raise it so much that the reason the Fed raises rates is because they're worried about the inflation and the economy overheating. Well, we're just when the plane just takes off and it gains altitude, now that we're just growing at 3%, you want to snuff it out and take the jobs away from all those people that have been looking for all these years, really want a solid job, and they're now getting wage increases that they've been waiting a decade for.
I think no one out there would disagree with the fact that Trump enjoys being president and doesn't want to give up.
That's an understatement. True.
He loves being president. So, and he knows, he's smart enough to know that if things don't work out with China, so he's very motivated, China is very motivated.
Yeah, and the one thing I think about this a lot, but obviously they can kind of wait him out. I mean, they're in no rush, but they've got the 2025 plan, but their economy is not doing well.
Exactly.
And and the reason we need to solve this is because if their economy and ours don't stay strong, then the whole world doesn't stay strong. And I've been saying along, they're going to cut a deal. They're both going to declare victory. I don't know how we can prove that they're not stealing our intellectual property. You show me how you're going to prove that. But the point is I think they're going to come to some agreement because China needs us as much as we need them.
How do you view managing portfolios in this environment?
Great question. So there's a couple things. As the Fed has raised rates, I can buy short-term instruments you know, I can get around 3%. That's not too bad. I can even get 2.3 in a money market.
See, a lot of people I think complain about, oh, interest rates are going higher, but the flip side is that if you're investing in bonds or cash, those yields are going up.
They are. So,
yeah.
So that's a competitor against stocks. You know what I mean? Because again, if I'm scared about the market, I could put it in a money market or something,
and get 2%,
and I get a little bit. It's better than zero, what we were getting for the last 10 years. Now, but here's the thing: when you have these kind of down markets, and where I say the opportunity is, we have always been in favor of rising dividend stocks, companies that have increased their dividends year in and year out for many, many years. Those companies tend to hold up better when you have these kind of down markets. They also increase the dividends. They're yielding better. Right now, they're probably yielding even more than the money market or close to that. So now, not only do you have an asset that can appreciate, you have an asset that's growing its dividend faster than what you can get in a short-term instrument. And another area that has been overlooked for a while, but it's been fantastic for a long, long time, and that is value stocks. Those are companies that trade at a discount to their intrinsic value, or what we call their breakup value. So
they're bargain companies.
Yeah.
Not necessarily like basement bargain.
They're good quality companies. They're just selling at cheap price.
Gotcha.
So those are the areas. The reason I say that's been fantastic, they've provided a return of over 13% over like a 90-year period compared to maybe 9% for, you know, other kind of companies. So when you have something like this happen, you have to be, you know, cool hand Luke. You got to remain calm, not make emotional decisions. And then I would say if you still think, oh my gosh, I still have way too much in stocks, well then you wait for the market to rally 6, 7, 8% in 19 if we get to that point, and then you take a little bit off the table.
And actually that's the other thing I wanted to talk about. When the market was so strong, you had a lot of people where, because the stock portfolio was going up so much, if they didn't rebalance, they might have been, you know, too high in stocks, and then as a result you have too much risk in your portfolio. And so we don't want that as we, you know, head to the later stages of this economic cycle. So we want to take advantage of opportunities. Now we don't want to do it now because the stock market is still, you know, down off of its highs.
When the market recovers and your portfolio moves back up, it's like when we have those discussions, that's when you want to take, you know, I call it taking cream off the top. That's when you want to get that allocation, throttle it back a little bit.
And it forces you to buy low when things are ugly and sell high, which is very hard to do if you don't have a system for doing it. At least when I talk with clients, I think a lot of them just assume that the next time we go into a recession or the next bear market is just going to be like what we had in 2008, 2009, you know, where the market goes down 50% and, you know, the economy is on the brink of disaster. But if you look back historically, unless there's the bubble type situation, you really can expect a garden variety recession.
Usually when January is strong, the rest of the year is strong, and we've started out strong. So, and we're also in a period where from the midterm elections to the summer of the following year, the market historically has rallied 20%. So again, I'm using some statistics.
Thank you so much for watching. If you're a client of True North, we're doing everything we can to make sure that we're helping you take advantage of these trends in the current market and economic climate. But I do have a favor to ask, because there are a lot of people out there who are very scared and uncertain. So if you have a friend, a coworker, a neighbor, a family member, your boss, someone that you know could benefit from watching this video, please forward it to them and tell them to watch. Thank you so much for watching, and we'll see you next month.
I'm actually pretty excited about 2019.
Really?
I am.
Okay. Anything else you want to say?
I wish my Huskies had done better in the Rose Bowl. It was neat seeing the stealth bomber, but it was a sad finish to the Rose Bowl. Long way to go to lose. How about the thinker? I'm thinking, how am I going to get some hair